Hey, what's up, everyone? It's your name here with Quick Tax and Accounting Solutions, Inc. You know taxes can be confusing, especially when it comes to running your own business. Today, we're diving into S corporations to demystify how they work and how they can save you money. We're going to break it all down in just 5 minutes so you can get back to what really matters, crushing it in your business. Now, before we jump in, make sure you smash that like button, hit subscribe if you haven't already, and let's get started. Alright, so let's start with the basics. What exactly is an S Corp? It's a special tax designation for corporations or LLCs. A C Corp pays taxes on its profits at the corporate level, and then distributions are taxed again on the individual level. It's like getting double taxed. But with an S Corp, things work differently. Profits and losses pass through directly to your personal income tax return. This is known as pass-through taxation. When you have an S Corp, you can potentially reduce your self-employment tax burden. You can split your business income into salary and distributions. Your salary is taxed at your regular income tax rate, plus self-employment taxes. However, distributions are not subject to self-employment taxes. Now, let's dive a little deeper into how S Corp are actually taxed. S Corp don't pay federal income taxes as a separate business entity. All income, deductions, credits, and losses are passed through to the shareholders. Each shareholder reports their share on their individual tax return. This pass-through taxation structure is where the magic happens. But there's a catch. The IRS is very particular about how you pay yourself. You have to pay yourself a reasonable salary. The IRS looks at factors like your industry, experience, job duties, and salaries for similar positions. If your salary is significantly lower than what someone else in your position would make, that's a red flag. The IRS might reclassify some of your distributions as wages, leading to back taxes, penalties, and interest. Not fun. Now, let's talk about the not-so-fun part of running an S Corp filing and compliance. You'll need to file Form 1120-S, the U.S. income tax return for an S corporation. This form is due by the 15th day of the third month after the end of your tax year. You'll also need to provide each shareholder with a Schedule K-1. If you're paying yourself a salary, handle payroll reporting, and withhold the correct amount of taxes. This includes federal income tax, Social Security and Medicare taxes, and any applicable state and local taxes. I always recommend working with a qualified tax professional to help you navigate the complexities of S Corp taxation. We can make sure you're in compliance with all the rules and regulations so you can focus on running your business. Okay, so we've covered a lot of ground here. Let's take a step back and look at the big picture. What are the pros and cons of operating as an S Corp? Let's start with the good stuff. One of the biggest advantages of an S Corp is the potential for significant tax savings. By splitting your income between salary and distributions, you can potentially reduce your overall tax liability. Another major benefit is limited liability protection. This means that your personal assets are protected from business debts and lawsuits. And finally, having an S Corp can give your business a more professional image. But it's not all sunshine and rainbows. S Corp require more record-keeping and paperwork than other business structures. The IRS will keep a close eye on your salary. There are also restrictions on who can be a shareholder in an S Corp. So there you have it. The ins and outs of S Corp taxes in just 5 minutes. If you're still feeling a little lost or you're not sure if an S Corp is the right fit for your unique situation, don't worry. That's what we're here for. At Quick Tax and Accounting Solutions, Inc., we specialize in helping business owners navigate the complexities of the tax code. We can help you determine if an S Corp is the right structure for your business and handle all the setup, paperwork, and ongoing compliance for you. Our goal is to take the stress out of managing your finances so you can focus on growing your business. If you're ready to take control of your taxes and your business, give us a call today or visit our website to schedule a free consultation. Don't let taxes stress you out. Let us help you make the smart move. That's it for today's video on S corporations. I hope you found this breakdown helpful. Taxes can be a headache, but remember, knowledge is power. Be sure to check back next week for more tax and business tips. And as always, feel free to leave your questions and comments below. Remember to give this video a thumbs up if you found it helpful, and don't forget to subscribe so you don't miss out on any future content. Until next time, stay smart, stay compliant, and stay successful.